blessed to be here. And as you heard, we're going to have an experiment today. We're going to have an AI panelist. I start by welcoming our guest today. And,
risk model is fun.
I hope that we'll have an interesting discussion about how leasing creates inclusive finance and helps society these days. And I think there's not, it is the best moment to discuss on how we do inclusive finance, right? We had like 6 years of lots of black swans. Each year something happened. And for financial institutions, I think it was a hell of a ride these years to and investors and regulators. It was a hell of a ride to keep the finance system functioning. And we heard Olena about Ukraine and how they manage in such conditions. I mean, for us it's going to be easy, right? I need to read something about our AI analyst. It's an experiment, right? So you'll hear some delays when I will call Alexandra. Alexandra, hello. Okay. Yeah.
Hello, Stefan.
Hey.
Yes,
Here's.
I'm here. Good to be with you.
Good. Perfect. So this is the future, a glimpse of the future, right? And when MFC proposed that we have this AI panelist, I said yes, because we'll see this as the month will come and the years will come, and this will be part of our universe as we go forward. Okay, so there's a change here. You will have with us Tornike, because the other panelists could not attend the panel today. Tornike, welcome. My proposal is to start a tour de table with our panelists and to tell us what they're doing in the inclusive finance, right? How the things are going, and we have the perfect mix. We have the regulator, we have the practitioners, we have the leasing company, and the investor. And I will start with the investor.
Hello, can you hear me? Perfect. So, hello everyone. Good to see you, everybody here. My name is Tamar Basilashvili. I'm a Senior Investment Officer at Triple Jump. Triple Jump is an impact-focused fund manager founded more than 20 years ago and managing assets more than 1.3 billion USD. We are having a global presence with around 4 offices around the world. I myself am located in Tbilisi, Georgia, and I cover debt transactions in Eastern Europe, Caucasus, and Central Asia region for more than 12 years already. At Triple Jump, we believe that by providing financial and advisory services, we support financial service providers at every stage of their development and pursue our mutual goal of creating more inclusive and financially responsible world and sector. And I'm passing the microphone to regulator, Ashot.
Ashot, please tell us, how is for a regulator to look at these markets and what inclusive finance is for you?
Hi, thanks for the question and thanks overall for the invitation to be here. It's my pleasure. Leasing is very important because this is not only about financial service, but leasing is also about innovation, about progress. Because whenever you act as a leaser and whenever the leasing agreement is in case, we are almost sure that somewhere or another end of the process we have some innovation, we have some technical advantage and so on. Of course, leasing creates also a new culture in the countries where previously we did not have this kind of services. I guess Armenia is a very good case because the leasing market, we are in a stage that leasing is increasing with very high speed. For the moment, non-official statistics, but we have almost 800 to 900 million euro of the portfolio of leasing in Armenia, which is still not the biggest amount. I guess it's not comparable to what we have in Western Europe or in more advanced countries of even of Eastern Europe, but the growth rate for last year was more than 20%. Means the market is really developing very, very active. And we were just talking like 10-15 minutes ago about some other actions that we have in Armenia in order to promote the leasing market. For example, our association, they organize every year this Leasing Expo, which is a very great opportunity to come and see in one place all the leasing companies and all the machinery providers and all the some other type of businesses in one place. And this is really a great initiative to do in order to have a...
Asha, would you call leasing the fastest growing market, finance market?
I guess for the last year, yes. Maybe if we take like in average last 5 years, we have also very high growth in normal business credit. But for the last year, I guess leasing is the most active segment.
Okay, thank you very much. Now we move to the practitioners, and I think it's very important to understand how they see the market. Arsen, how do you see it?
Good to see you, and I hope we'll have a very interesting discussion during this panel. I'm Arsen Bazikyan, I'm CEO of Armenian Leasing Company, and also I'm a chairman of Lessors Association of Armenia, which representing with the more 17 financial institutions, both bank and credit organizations. My colleague Asha Petrosyan talked about leasing as not only the financial product. Yes, of course. It is a product moving forward both technology, both innovations, and in our company, when we have started, we're just thinking about the maybe $10-12 million after 3 years of our activity. That after 3 years of our activity was our portfolio was more than 30 million. Right now, this is more than 60 million euro. So, what is interesting that this is well diversified because we are presenting all of the sectors like agricultural, industrial sector, transporting sector, different types of the medical equipment, solar panels, etc. So we're just financing all of the economic sectors in Armenia. And what is I want just to mention that MFC, not now, but right now we're starting the commercial real estate. Of course, this is the next step of our development. But what is interesting that I just told the information also from the name of our NGO, the Social Association of Armenia, that when we have started and working with the central bank, with the tax authorities, with the Ministry of Economy, there was some changes in the legislation update, and even daily we do more in order to have some new possibilities and for the leasing transactions, like secondary leasing, like leaseback transactions, all types of transactions. And what is interesting that this rapid growth, it is also with the helpness of our government of supporting the programs. We have 3 supporting programs of leasing: agricultural equipment, industrial equipment, and also the equipment for the agricultural food processing. So the government helped us with from the 6 till 8% with the annual interest rate supporters. So it just helped us to become more flexible as well as more competitive.
Thank you very much. So clearly, also for you in Armenia, it is one of the fastest growing financial institutions and sectors that is financing actually the development, and that comes back to the title of our panel. I would also shift to Torike, to Georgia, to tell us what is his view on the market and how they're developing in the last years.
We are growing at around 30% annually for the last 4 years, sorry. Within the financial sector, leasing is the fastest growing industry. Neither banking, nor microfinance, nor insurance, nor payments grows at that pace. So why does it happen? It's mainly explained due to the fact that actually our business model is developed around inclusivity. And why? So we are the first stop. So we serve early stage businesses that approach us and that are just starting their operations, and they need fixed assets to start and operate their businesses. So it's a core of our business, this inclusivity, that those businesses there that might not be so easily bankable, that might not have so easy access to banking products, are approaching us, and we are kind of the only financier for them. So this is really important, and we see really good results from that. So as we calculated, we have really good figures in terms of employment. I mean, the loans that we and leases that we provide for our clients create new jobs, around 500 jobs annually, which is a good figure for us. So in that regards, we try to offer diversity of products. We operate in all industries. It's a widely diversified portfolio. And what's most important is that we mainly serve micro, small and medium-sized enterprises. So up to 90% of our portfolio is spread among this MSME clientele. So yeah, I mean, we are really kind of active, and also it should be said that overall, in region-wise, not only in Georgia but in Caucasus, the leasing market is developing really rapidly in Armenia, as Arsen mentioned, and I think there is a big hope for this industry, and we are kind of trying our best to achieve these results.
Thank you, Tom. So it's clear that leasing it's an option for the micros and MSMEs, right? So this is clearly the option for Georgia and Armenia. And if I look at, I'm from Romania, by the way. I'm the president of the Romanian Microfinance Association and European Microfinance Network. In Romania, we saw that leasing was an important factor in financing, especially agriculture. But we diversified a lot in the last 20 years, let's put it like that, in financing even other sectors like healthcare, for example, also industry, production, and that part. And real estate, actually, it's also part of the game. So we see that leasing, because in the sense, leasing is a very simple product, right? I mean, you give against the asset. This is actually when you ask if you're a corporate banker and you look at leasing, it's just leasing, you know, it's not something complicated. But I would like to hear from you, how complicated is leasing these days? So I will start with Arsen.
On the first side, yes, maybe it could be just an easy product financial, but it is not. It's not right, because really leasing includes all of the types of transactions, and it is very workable, because really you need to start your first negotiation with the suppliers, just negotiation for the payments, then transporting, then moving, then custom clearance, and everything. So not all of the suppliers are located in our country, and we just working also with the non-resident suppliers outside of the country. So here you need to provide them more flexible services, which is including importing, insurance, custom clearance, brokerages, everything. So one person, as one person works on the our leasing transactions, around 2-3 days, only just for preparing of the transaction main terms, as well as just also conditions for this. Moreover, we are working with the different also ways of the attracting of the financial resources at the same time. So we here just want to mention one of our partner, Triple Jump, in face of Tamara, from where we can just attract specialized, very specialized financial resources, goes to financing of women's business, financing to the some like eco and energy efficiency financing, which goes to the green solutions, and also it is applied to our customers with the best conditions, and they are looking on this. Also, we are working with the different, how to say, instances like tax authority, like duty customs, like all types of the insurance payments. So that is why it is so complicated. But really, on the other side, it has its advantages, because we are working with them. We just received from the different keys of the sales channels of our customers, and it's different comes from the different way, both from suppliers, from the exhibition, etc. Taking into account also the possibility to present the leasing as a special product. I'm just talking about the leasing expo that we have in our country the last 4 years. And this is a very interesting meeting platform, which is allows to current suppliers to present their brands, their new technologies, their new know-hows, and also at the same time financial institutions and customers who could choose the equipment in general. So
it seems not simple at all from a practitioner point of view, right? It seems quite intense, the process. And now, let's look at the future. Alexandra, please, tell us in 3 minutes how simple it is to understand for a client a leasing product.
Three minutes. I'll need one. Honestly, for a client, leasing should be the simplest financial product on the market. The pitch is, you want the tractor. We buy the tractor. You pay us monthly while you use it. That's it. A farmer in Gyumri doesn't need to understand amortization schedules to get that. But here's what actually happens. We dress it up. Residual value clauses, VAT treatment that changes, depending on whether it's operational or financial lease, insurance bundled or unbundled, early termination penalties buried on page 9. By the time the client signs, the simplicity is gone. The company's doing this well, and I point to what DLL does in European agri-equipment, or closer to home. What some of the solar leasing players in Kenya, like M-Copa, figured out. They collapsed the decision into one number. Monthly payment, all in, for the asset doing the work. That's the number the client cares about. So the product is simple. We make it complicated, and then we wonder why penetration in rural segments is low. The honest answer is, if your sales agent can't explain the lease in 2 sentences at a kitchen table, you've already lost that customer.
Thank you, Alexandra. Well, you see, it is complicated, it should be simple, for clients should be simple, also for organizations should be simple.
You're welcome, Stefan. Happy to hand back.
However, we're talking not about easy times, and I'm turning back to the investor, and I'm just asking Tamar, how do you do the risk assessment these days? Do you, consider the DAI, the ESG, the other factors that are, embedded in financing all around the world now, and how you cope with these changes we have in the economy and everything around us?
Thank you, Stefan. That's a very good question. From lending perspective, I would say the key message is still that creditworthiness is a key factor for testing, let's say, new funding opportunities. So when lenders make assessment, they first of all look at the strong cash flows, they look at sustainability of the company, at capitalization, leverage, at quality of management, of course, and the structure of the deal. So ESG and equity, of course, it's very important. It still matters, it still counts, but when making decision, it's additional, let's say, complement to creditworthiness rather than, let's say, assets or points that can be valued on a standalone basis. So we have like really track record of, with me in the sector of around 12 years, I have seen quite a lot of things in our region and market, starting from hyperinflations, financial crises, COVID, war. We have seen many institutions that have overcome these difficult situations. Some sustained, some didn't sustain. So given all this, let's not to be very, very long in this discussion, but to keep it to the point, I would say that still the market today is very sensible. It's even, I would say, for investors, downside focused. We value sustainability in the companies and strengths we look how the institutions can serve that in base as well as downside scenarios. We look how they can sustain in particular difficult situations. We finalize different scenarios with liquidity shortages, with inflation, with different scenarios to see how the companies are going to sustain. And all this brings us to credit decisions, whether to support or go forward or not in particular scenarios. As for ESG itself, it's maybe I would highlight that governance is the most important and consistent factor of ESG, and we value it through generally in our credit decisions, through governance, supply chain, through reputation, of course. In regards with equity, we focus on human retention, culture, also governance, and all this is factored mostly in human capital of the company and management. And as I mentioned, it's not like a separate, let's say, indicators that you can look. Oh, they have a great ESG, ESMS policy, and we can proceed with financing. It's not like that. If the institution is self-sustainable, it's credit-worthy, and it has on top all these, let's say, elements, we are always, let's say, they are ready to support. And we are also ready to support not only financially, but with technical assistance where possible. We have at present, like most active 2 funds in our region, and one fund, the Gender Global Smart Fund, that is focused on addressing gender gaps. It comes with technical assistance and support. We try to address all the gaps that institutions have and support them in particular directions, give them a hand, let's say, and develop the best practices across the market that would help them to serve in a most, let's say, socially responsible and correct way, in simple words. But to summarize, maybe also for lenders, the key focus remains on clear deal structures, let's say fair, transparent relationships, at reliable reporting, and of course downside protection.
Oh, that sounds fantastic, Tamar. But can I ask you a practical question? What is your IRR these days, ROE, and did you consider to introduce SROE in your assessment? Social return on investment.
It's also a good question. So let's say there are different ways to measure it, to look at it. I would be transparent that currently we are also at Triple Jump changing our, let's say, approach to how to measure social, let's say, return in a numerical way, which is not easy, I have to say. And there are different tools for it. Maybe a good example would be to bring here like a Linus questionnaire, which most, I think, of the audience in this room very well know. Yes, it's not easy, it's a lot, it's a big questionnaire with many questions there, but it's also one of the tools, maybe a good example to showcase how lenders can assess, let's say, the social standing of the company versus the market in which these companies operate. So I think, yeah, but we are also on the side of the lenders because we also understand that it's a very cumbersome process for our investees to comply with all these requirements, to fill all these huge reports. We are also trying to make it, let's say, as simple as possible for them and streamline that process. And hopefully in the future we will have a bit more, let's say, clear, let's say, shorter maybe ways to assess this social standing. But it's an important part of the process, of course.
Yeah, it is, and I'd like to answer, of course, it's not easy to put it, and we're discussing EU level around and globally how we have a uniform standard of measuring that. What is the best way to measure it? What is the theory of change for that part of measuring it? And we have investors with really different approaches, and this confuses a lot the beneficiaries, you know, because you need to report differently. And if you have, like I was talking with Tornike before, and we have like 5, 10, you know, founders, then in the end you have like 10 reports, and that gets really cumbersome with your systems. Thank you for clarification. Now I turn to Ashok and the regulator, because we're talking now about, you know, responsible and inclusive finance. And we're living in a world in which we have like high inflation, you know, NPLs are not where we would like to see them, right? Then a lot of the middle class is going down to the lower class, right, these days. The financials don't look the same. And as a regulator, looking at, you know, long periods of time, you're not looking at each year, right? You're looking 5 years, 4 years, and as the market is evolving, how we include this impact that organizations need to have in the society in your analysis, and what is your proactive approach on that? Because we had our discussions, and you said that it is very important how you plan and you basically include the green sustainable part in your analysis as a regulator.
Yeah, I guess it's a very tough question, because unfortunately during the recent period, and even yesterday we had a discussion with other participants which period we can take as recent, because unfortunately last 30 years of development in our region we are almost in kind of recent part, because we have some changes, we have some fluctuations, and I hope one day we will come to an idea that the recent part is already gone and we have the future part. But yes, we have lots of fluctuations, and recent, for example, the same with energy prices, like the recent changes with energy prices. And unfortunately, all this hit the main target audience for leasing first. I mean, like SMEs and even the private entrepreneurs. They are the main target zone of all these fluctuations and uncertainties. So this is really very big problem for the future development. But one, may I say, positive side of leasing is that, especially with leasing, we have asset-backed financial product where we have real working productive asset there. And this really makes the NPL level be, in some cases, even lower than average credit portfolios. And the economic impact of leasing is much more important, because when we compare leasing for like credit loan with credit loans, of course, with credit loans we just have the good well-being of some individuals or households, but with leasing we have some productive action there. So it's really, for regulators, much more important to understand how we can support the market, and especially for the period of time, I guess, still, as Arsen told, they organized amazing, for example, awareness actions in Armenia, but still the overall awareness of leasing products is not very high. And even after all these years of very active activities, we think that the awareness is not the biggest, at the highest level, and we still need to continue our efforts in this. And even one more thing that I would like, during vulnerable periods, during the periods where you have lots of uncertainties, people usually postpone the topics about, for example, sustainability. They don't care about sustainability that much. They care more about their vulnerable periods, how to stay alive. But in case of our region, and especially I can't talk about Armenia, we add even this additional layer on the problem. So we don't just want to have leasing there, but also we want to have sustainable financial sector. And this means we want to also be sure that the sustainability issues are still there. And here we also have some problems, because you know that leasing mostly operates in areas which have really high impact of climate change, like agriculture is maybe the best case. So we need to do some actions to understand, to be sure that the leasing in agriculture goes to make agriculture more sustainable, and not just to make things going as it was like 15 or 20 years ago, with the same technology, with the same processes. So all this creates really a hard task for regulator to act in order to have the market developed, but also sustainable and inclusive.
Thank you. I will also do an exercise now with Alexandra. And Alexandra, please answer us in 3 minutes on how regulators should include the inclusive finance and responsible finance in their policies.
Three minutes, one answer. Honestly, most regulators in our region are doing the right things in the wrong order. They write the ESG taxonomy first, then bolt on inclusion as an afterthought. It should be the other way around. Here's what I mean. The National Bank of Georgia did something interesting a couple of years back. They started requiring disaggregated reporting by gender and region before they wrote any green taxonomy. Suddenly, every MFI and leasing company could see where the gaps were in their own portfolio. You didn't need a penalty regime. The data alone changed behavior. So my answer is, regulators should mandate visibility before they mandate outcomes. Make institutions report who they're actually serving. Rural versus urban. Women versus men. First-time borrowers versus repeat. Publish it. Let the market and the investors do half the work. The second thing, and this is where I'd push back on how it's usually done, stop treating responsible finance as a separate reporting stream. Tamara just said it. 10 funders, 10 reports. Regulators can fix that. Pick one framework. Align it with the EU's SFDR, where it makes sense, and spare the institutions from drowning in questionnaires. Spoiler, if compliance costs more than the loan margin, inclusion dies quietly.
Thank you. Sorry to make this really challenging panel, but I think it's really interesting because we need to curate these models, AI models, right? We have to experience the human touch, and as we go forward, we need to include the human touch as we include AI in our lives, and this is going to be the immediate future that we're going to face. Now, Tronik, I turn to you and I ask you, how difficult is to do business these days, with all these requirements, reporting, and so on that we have, and with the very difficult market, and how significant is the implementation of inclusive finance instruments in your business each day?
Thank you, Stefan. Absolutely, difficulties is part of the process, so we try to learn every day. We update our knowledge constantly because we face new difficulties in every year. But this is a normal process. We try to be solution-oriented. We try to find solutions, and in this process, as Tamar mentioned, the people with whom you are doing the business, whether this be your creditors, whether this be your vendors, whether this be your clients, it's the key that they are also solution-oriented and not like punishing, even regulators, let's say, or governmental institutions, right? So I think there is every problem that is created by humans can be also solved by the humans. Important is that you need to have a long-term vision, and that's what sustainability is all about, right? And to make sure that this long-term vision is properly communicated with your clients. So the problem and challenge what you asked about is mainly in visibility and in awareness. As Ashok mentioned, and Arsen also was talking about this awareness campaigns, people nowadays, since we operate mainly in Georgia, still are not aware about full potential of leasing and full potential of inclusive financing. And it's no one's fault. It's just it's as it is. It just takes time. So we see a lot of potential in that. If we continue our promotions, our market awareness campaigns the same way as we do, I think this problem will be solved over time. So once you will give people and businesses the tools that they need, I think once they see it, once they know it, then everything is done by itself. When they already have these readily available solutions. And just one thing I will add, we position our products and our company as a building block for business. So when we are approaching business, we are telling, okay, you want to open a retail grocery store, right? What do you need? You need building, commercial space, you need shelves, you need cashier, etc. So these are the building blocks of the business. So we can provide 2 or 3 building blocks that you need. You should take care the rest of them and operate the business. So we try to position ourselves as a business building block provider, ready solution provider, and this makes for them much easier to make decision, to see the big picture where the leasing is positioned, and this really makes this process really efficient. So yeah, just to summarize, problems are mainly about proper positioning of the product, right messaging, and proper communication. And these are the things that can be also effectively addressed.
Yeah, that's clear. I mean, it's also about process, always. The idea is good, but it's how you implement it. And in the end, when we talk about inclusive finance, it's not just a word, right? It's what it means for each of us and how we implement it. Okay, gradually we're closing, but we still have time. So this is a test also for Alexandra. Now, to summarize in 1 minute, Alexandra, what we basically discussed today on how leasing helps inclusive finance.
One minute, here goes. Leasing earns its place in inclusive finance because the asset does the work. That's the through line from everything we've heard. Tony's point about building blocks, Ashutosh on productive use, Tamara on downside protection. They all converge on the same thing. A lease is collateralized by a tractor or a solar panel that generates the cash flow to pay for itself. That's why NPLs are often lower than unsecured credit, and why it reaches segments banks won't touch. But, and this is the bit we should be honest about, none of that matters if the client can't understand the product in 2 sentences, or if the institution drowns in 10 different ESG questionnaires. The unlock isn't more sophistication. It's radical simplicity at the front end, and aligned reporting at the back end. Get those 2 right, and leasing becomes the most underused inclusion tool in the region. The assistant is silent.
So we'll have that, right? AI failing on us sometimes, right? So this is why we still need a human touch. Please.
I'm just to say that the human brain is most attractive than the other, how to say, technology, because really I want just to focus on one of the how to say big mission that we have on our shoulders as a leasing companies. It's a financial literacy also goes to all of the participants of the leasing transactions, not only to the customers. It goes to the suppliers, to the other participants. But at the same time, I want just to focus on one big also advantage on the leasing, which is added value product. And in compare with the other financial tools and other financial products, if from the point of view of the customer, if you take the loan, you can just enlarge your movable assets, or you can just saving some costs, some etc. But through the leasing, it is a new key of generation of the profit. If you use the object of leasing with the right, you can just have a part of the payment for part of the profit for the leasing payment, another part for the enlargement of the business. I want just to how to say focus on all of our audience for this added value specific advantage of the leasing transactions. Maybe this is could be not identified by AI. It is identified by the experience that we have in our job.
Great add-on. And before the questions, I would like to put the last question to Alexandra. Alexandra, what did we not cover in this panel today in 1 minute regarding the inclusive finance as leasing product?
One minute. What we didn't talk about. The second life of the asset. Every leasing conversation today was about origination. How to get the tractor or the solar panel into the hands of the farmer. Nobody asked what happens in year 5. Here's why it matters. The repossession and resale market is where inclusive leasing either scales or quietly dies. If you can't move a used asset, your risk model forces you to lend only to the safest clients, which is the opposite of inclusion. Kenya figured this out with solar. Companies like Nkopa built refurbishment and secondary markets before they scaled originations. That's what made the unit economics work for the bottom of the pyramid. In our region, almost nobody is building that infrastructure. No used tractor exchanges, no certified refurbishment, no cross-border secondary markets. Until we do, inclusive leasing has a ceiling. And we'll keep wondering why it doesn't reach the clients we say we want to serve.
Fantastic, huh? I'd like to thank our panelists today. It was a great conversation, and now we're open for questions.
Do we have any questions? I can share the mic. Grzegorz?
Maybe you can comment on Alexandra's issue on the secondary markets. What do you think about them?
First of all, when Stefan told me we will have AI, I was a bit skeptical. AI, come on. But really, I mean, it was so good insights in second answer and also during the summer in Bravo. I think it will be the must in the future panel. So, and regarding secondary market, actually this is the core, I would say, the very important part of the leasing model generally. And I will answer by starting from the beginning. And when we analyze the project and analyze the risk during this underwriting process, we look at not only the client's credit risk, which is usually analyzed during the risk assessment process in the banks, but also we look at the assets, liquidity risk and liquidity position. How liquid is the asset? So, for example, if the bank would turn down the client with a high risk, we might not do that, or maybe with the client that has not that big experience in doing business, we would not do that if there is an asset with a high liquid value, I mean, which is really liquid asset. So we can combine these two, or the vice versa. When we see a really illiquid asset, but the client has a very low credit risk, we can also combine these two. Okay, so what I want to say is that if leasing company does not have the competence to manage the assets after they are terminated, you better not do the leasing business. So this is a really core part of leasing activities, that you should be aware what these assets value will be in, let's say, 5, 6 years, then you might have to resell it or release it. So definitely, I mean, this is a key point and very well addressed. This is mainly done through the deep analysis of each type of asset, and this competence should be existing within the company, inside the company. This is our best practice from our personal experience.
With the notion in mind that residual value should be always more than nominal value, right? I think that was one of the first. I smiled because back then, around 10 years ago, when I was conducting first due diligence with leasing, I think the first rule that I learned that residual value of the asset should be more than nominal value. So that's exactly makes sense to that.
Also on this?
Just to add about this high competence that my colleague Tornike mentioned, because really this is one of the big difference between other financial institutions and the leasing companies, because you need to have some experience historically, and also you need to have just impact from the market. So it's really difficult and too complicated in this how to say high technology raising period when we just received the new how to say the type of the technology in the medical equipment, and after 6 months you can just receive the new one, which is more and more how to say complicated, and so you can lose during only just during 6 months. That's the part of your secondary. So it is necessary to be more and more how to say stronger and as well as flexible in the same time.
Yeah, we need to rethink amortization and IFRS, right? It's going to be an accounting nightmare, a taxonomy nightmare that we're going to see in the next period. Other questions?
Yes.
Please.
I understand that basically all of your transactions are collateralized.
Please can you state your name and the organization? Help us to.
My name is Alberto Guidoni. I work for the Development Guarantee Group in London. So I understand that all of your transactions are collateralized. So I wanted maybe to ask both to the two practitioners as well as the regulator about the role of guarantees, whether you need guarantees or not, and why as a practitioners, and also from the regulator's perspective, what would be the treatment and the advantages of having a guarantee, portfolio guarantee in your country?
Right. Who wants to start?
I can answer first. So thank you, Alberto, for the question. We have not actively used guarantees previously for the wide part of our portfolio. The only case we use guarantees is with the governmental programs. These are some special programs in Georgia that support entrepreneurs to start their own businesses, the subsidizing programs. It's called Enterprise Georgia. Government subsidizes interest rates, but also they have added some new product, which is a guarantee component, and government guarantees 50% of the loan asset value, and we have really actively used this program for some specific projects, but this is a very tiny part of our portfolio. The reason is that maybe there was not that many solutions available on the market, and it's not that market practice yet, but potentially it's a very interesting solution to kind of minimize the risks, and I think we will very actively consider implementing these kind of instruments while financing some and introducing some new products on the market.
Yeah, maybe just very short, as Tornike told about the programs, I guess we have almost the same with the government. I don't have any statistics how much the guarantee scam is used in Armenia, but overall I think that in case of leasing, the necessity of guarantee programs maybe is a little bit less compared to some other credit instruments, because anyway you have the productive asset there. You cannot have the situation where you don't have any backed asset. Still the guarantee can be an interesting solution, but first I don't have statistics, and then the necessity maybe is a bit less in case of leasing.
Just to add that based on our best practices, guarantees can be used in case of the startups and in case of more risky projects that we can have based into taking into account maybe just a very complicated or residual value or some evaluation of this year by year. So guarantee also can help us at the same time. Of course, as my colleagues mentioned, this is not as its right impact maybe on the leasing transaction, because this is a specific deal in compared with the loan. But really, it can, as it's mentioned, on the startups, on the different types of the businesses where we have no such, how to say, high information about the project implementation, etc.
Yeah, and I would add warranties would be necessary where you don't have such a strong secondary market, or you have like mobile assets, however not really mobile, they're becoming immobile due to their use. You get that as you go in industry, production, and healthcare especially. Well, we have a lively discussion here, but I don't know if we have time to organize that for another question. The last one, maybe? 3 more minutes. Okay, please.
Hello, thank you for very informative session. It was really innovative and you speak Alexander. And my question is related to artificial intelligence. How do you think leasing industry and operation of procedure will be changing when incorporating AI into your products and procedures? Thank you.
So just the last information comes from our marketing department when she told me that the AI could help us to organize the leasing process in general. So I can just mention that the last 2 years we use some interesting AI solutions in our business processes, mostly in the customer attraction process, when we try to found the new keys of sales and also channels of sales. So AI just targeting provides the information about how we could find them. And also based on our current business processes, which is changing each year, and then it depends on the types of the leasing transactions. The AI helps us to, how to say, optimize the processes of the working with the contragents, like with the insurance companies, to providing the preliminary information to the potential customer. So this is just not only just an idea. This is just a process that we use at this moment.
I'll also, end by asking Alexandra how AI in the next 3 years will take over leasing operations. 1 minute, Alexandra, please.
I think she's already...
Okay.
Yeah, she already went out, actually.
But you see, we used to the last bit, Alexandra. Oh, she's there, but not there, Okay, fine. So...
Maybe the last word for the humans,
Okay. Thank you very much for a very lively discussion today. Thank you, the panelists. We have another question?
If we have time, I have just one.
Please.
Okay, thank you. Wojtek Stępień, MFC, interim CEO. Just quick question. I won't elaborate and no introduction, so just a quick question. Do you see the potential of collaboration with microcredit institutions?
Well, it's a short question with a long answer, please.
Just to clarify, you mean collaboration between microcredit institution and leasing companies?
Yes.
It's I think, more question to practitioners, but generally we have seen some examples of such collaborations within our region. But I would not say that this is something that happened at a later stage, but it was a bit more from the scratch, that microcredit institutions at some point established leasing direction and had this line together with their core activities, so having like both microcredit, MFI institution and leasing institution in one, let's say, consolidated structure. But yeah, maybe.
In our toolbox of products, we have a product which is called micro leasing, and this micro leasing also could be also one of the point of our collaboration between your, how to say, customer base and between together with our customized experience leasing transaction.
Yeah, in my experience, is more of a competition, to be frank, because normally leasing is giving in, strong currency with low rates than microcredit is giving, basically. However, if you're in a group and you have a micro lending company and the leasing company and the bank, so then you can have an ecosystem and can go with a bundle of products. It depends how it's set. Okay, thank you very much. Again, a round of applause for everybody.